question 11, a little 3-mark written one, explaining one advantage of a sole trader in a growing business becoming a private limited company. Now, obviously, we've got the generic advantages. I can't even speak. The generic advantages of becoming a limited company, so things like being able to access different sources of borrowing, selling shares to family and friends, that kind of thing. But really, if we're talking about a growing business, the main advantage for me is going to be the fact that there's limited liability. So if the business were to fail in its attempts to grow, then by being a company, the owner wouldn't be putting their personal assets at risk. So I think that's probably the best and possibly the only way to achieve 3 marks for that question. Okay, right, we're going to go straight into number 12 now. Z Limited provides the following monthly information about their 2 products. They've got product A and product B. And this is looking to me like an activity-based costing question, because the minute we see batches, we think, yeah, we're going to be using activity-based costing, because remember that activity-based costing attaches overheads to the units of output, but it takes batch size into account rather than just treating all units created equally. So we've got some information here. It tells us they're using activity-based costing and that each batch requires a setup at the start of the production line. The total setup costs are £16,500 per month. Okay, so what we need to do is find out how many batches are going to be carried out during each month. So product A, 3,000 units in batches of 150, so that's 20 batches. And product B, 2,500 units divided by 250 is 10 batches. So then we can start working out a price per batch. So 30 batches in total. 16,500 divided by 30 is £550 per batch. Purchasing overheads are 4,600 a month. And we've got some information here about purchase orders. Product A has 10, product B has 15. So if we divide that by, divide that one by 25 purchase orders, we can come up with a price per purchase order. So 4,600 divided by 25 means that we're going to be charging £184 per purchase order. Other fixed production overheads are £22,000 per month and are absorbed per unit. So if we look here, we're making 5,500 units. So each unit is going to get an extra £4 in overheads. Okay, so what we've got to do is calculate the total monthly production cost of product A. Okay, so product A is going to cost us materials of 7,400. We've got up there. It's going to cost us labour of 2,750. And then we've got 3 lots of overheads. So it's going to have setup overheads. And it's 20 batches at £550 per batch, which is 11,000. And then we've got purchasing was 10 purchase orders at 184. Don't know why I'm using a calculator for this. 1,840. And then other production overheads is the number of units, 3,000 units at £4 each, which is going to be £12,000. So the total is going to be the sum of this lot, 7,400 plus 2,750 plus 11,000, 1,840, 12,000. It's going to be £34,990. Okay, so that's 7 marks dealt with there. So question 13 has given us a break-even graph that is not drawn to scale. Okay, so we can see we've got some numbers marked on here. Total revenue is marked here at 4,000 units. So we can start using these figures to find out like what the selling price per unit is. We can look here, we can see total costs is this line here. It starts at £60,000. So that has to be the fixed costs there. This is the total cost, 132,000 at 4,000 units. Now, remember when we're doing marginal costing, we're not really interested in total cost. We need the fixed costs and we need the variable costs. So the variable cost is the difference. So difference between 132,000 and 60,000 is 72,000 at 4,000 units. That's the maximum value on this graph. So the variable cost per unit is going to be the 72,000 divided by the 4,000. So it's going to be £18 per unit. Okay, so we don't know what this break-even point is at the moment. That's what we're being asked to calculate the break-even point in units. So if we remember to go back to the original formula, we want our fixed costs and we want to divide those by the contribution per unit. Okay, well, the fixed costs we worked out are £60,000, and the contribution is the difference between the selling price, which is 168,000 divided by 4,000, which is £42 per unit, minus the £18 variable costs, means a contribution of £24 per unit. So 60,000 divided by 24 means that our break-even point is 2,500 units. Okay, so fairly straightforward there if you know what you're doing. That's the key there to realising that that's the fixed cost. The difference between the fixed cost and the total cost at this sort of final value here, 4,000, is going to be the variable costs. Okay. Right, calculate the margin of safety as a percentage of output if the business makes and sells 4,000 units. So the margin of safety is the excess above the break-even point. Okay, so the output is 4,000 minus the break-even point, which if you remember we calculated over here was 2,500 units. So the margin of safety is 1,500, and if we divide that by the current output, and then times it by 100 to get it into a percentage, the margin of safety is 37.5%. So it's 1,500 units, and then related to the current output of 4,000. Okay. Last bit then, calculate the profit or loss made if the business makes and sells 2,800 units. Now we know that our break-even point is 2,500 units. That's the point at which no profit or no loss has been made. Things are exactly equal, total costs and the sales revenue. So if we make an extra 300 units above that, the contribution on those 300 units is all going to be profit. So we're making 2,800 units minus the break-even, and if we times that by the contribution per unit, which we worked out over here, £24, that will tell us the profit. Really easy, 3 marks. Again, as long as you know what you're doing. So £7,200 profit. So contribution, really useful figure, particularly when you haven't got roundings, when the break-even point is a nice round number. It works really well to use contribution to find the profit or loss at any level of output. Okay, so that is section A completed. I will do a separate video going through the questions in section B. Thanks very much for watching.